Hey guys, it's Fidget here. I'm a night behind, but I still wanted to go over those two trades I mentioned I would put out. Um, I also took some trades today. I won't recap those just because I already have two that I'm going to put out today, one on Apple, one on NASDAQ. And the trades that I took today were also on Apple and NASDAQ. I believe maybe, or not on NASDAQ, sorry, on SPY. So Apple and SPY. Um, and they were sort of similar. Maybe I'll go over those tomorrow if I have some time, but for now I'll just go over these two other trades. They both panned out very similar. The percents were very similar, so I'll just pick these ones since I said I would, and I like to catch up on what I'm a little behind on. But anyways, so starting off, I'll go ahead and take a look at the Nasdaq over here. So coming into our day on Thursday, I saw the pre-market where I saw where we got bought up at 11,500 with two bullish engulfings on the hourly. So once, twice. And if I lead to the 4 hour, we can see that turns into a small bullish engulfing hammer, creating support down there at 11,500, which engulfed here. Delete that bottom one. So seeing that, made me potentially think I could look for a long. Now, obviously, we were in a downtrend, so you don't want to hop on longs right away. But I saw structure trying to be broken, so with that high there, we made a higher high. So I wanted to see if on this day on Thursday, we could try and push even higher towards 12,000. Unfortunately, we didn't get that move to 12,000 that day. We got it today, but nonetheless, we were able to get a trade off of this. Now I'll zoom into the 1 hour. So seeing those buy ups from 11,500 to my white dashed line here, gave me confidence that I would like to trade based on this zone down here, if not this zone up here where we saw, one bullish engulfing here or bearish engulfing there at our resistance, another bearish engulfing at our resistance, and then another one right there. And then we came into here, we didn't get any, so none. We had this bullish engulfing, none at the top of the range, and then a doji that put us back close to the top of the range. Now, generally, when I'm seeing something like this, right, rejection, 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 and then it's starting to form support, I actually won't normally take a long up here at this resistance. Why? Because, obviously it's rejected twice. It could again. So it's a little bit more risky, especially when in reality you don't have support anywhere up here. You have it down here, so you're better off trading down here. But that stuff happened pre-market, and I didn't get my candle close until it bought back up. So, anyways, after seeing the market open, we got our quick dump to the downside, but we got bought back up. We dumped right down to that zone I was watching. So when I saw it wick down there, I potentially wanted to go long, right? But I looked over at the longer time frames. I zoomed out to the 4 hour and was looking like, wow, if this does close down here, right, it would have been a massive bearish engulfing hammer. So I had to have some patience there. But once that hourly candle closed with that doji, I started to look for longs in the market because we had our bounces twice off that zone, and I thought, we might be breaking trend with these higher lows and maybe push towards 12,000. So I went ahead and took a long on Apple. It had a nice setup in my opinion. It had a really nice setup. We had a decently simple bull flag right at pre-market highs of 136.95. I've got that marked here on my screen. So a lot of the time, if anyone watches my videos, you'll see that I enter on bearish or bullish engulfings. If I'm going short, of course, a bearish engulfing. If going long, a bullish engulfing. But in this case scenario, we can see that it never came, right? But what we do notice is pull here, and then a flag here. And the candle that I entered, when it closed above all of the bodies of that entire flag and closed slightly above pre-market highs. Right when it got that close, I went ahead and took my entry at 740.06. So right here in this candle here, right here. And then shortly after, the market decided to move a little bit higher. and I got that move up to my profit target, which is 137.74. So looking at that entry point, my stop loss would have been a close under 136.96. So my stop loss would have been in this gray shaded area, and my profit target was right about here. So there's my stops and my profit target. Shortly after entry, we got to move up, where I took my first trim at 742.27, which is right after my entry. Got an exit for a quick, I believe, 8 or 10%. So I went ahead and trimmed those from 130 to 1.37. So only $7 per contract. You may be wondering why I would take such a small profit. It's because my resistance from the previous day was so close. Even if it had a nice bull flag, the resistance was so close. I did not want to risk losing my profits. And I also noted to myself that Nasdaq was at a level where it had previously rejected with bearish engulfings twice already. Maybe even 3 times so 3 times if I even go back. So I went ahead and trimmed there. That was my first trim. That way I had less risk on the table, which is always something I'll do. Shortly after that, at 7:57.57, I exited the rest of my position exactly on that 137.74 level, from 130 to 140 for a small, once again, 8 to 10%. And then at that point, I thought, we're flagging again. Potentially we'll move higher, so I'll put a stop in my entry, which was at 136.95 level. And I put a stop there just in case, we pull back. So clearly we can see after that happened, we pulled back to this blue line here, which is pre-market high, which is my entry point, and I got stopped out of my trade. The market moved down after that, tested, close to our lower day, and then moved back up, which I potentially could have stayed in this trade, but it passed my stop loss and clearly had a bearish trend. So having a stop in my entry, saved me from having to hold through this trade for the whole day, and probably coming out barely break even after theta. So it's always good to put stops at entries. There is no reason to let a trade go from green to red, especially something that is a breakout while the market's at resistance. You just put stops at entries and you do not have to worry about it. It is easy to make bad decisions, right? But it's easy to make a good decision. Putting a stop there is a great decision, and it will stop you from having amazing trades go red. 10% is amazing, 8% is amazing. Negative 20%, negative 10% is not. Break even is amazing. Anything red from green is terrible and something went wrong, okay? So now that we looked at our Apple trade here, we can see that I got stopped at entry because the day, started to turn a little bearish. At that point in time, I had already noted in my head Nasdaq was at resistance. So I went ahead and looked at QQQ and saw that clear rising wedge, right? Rising wedge into pre-market high, which is 284.28, which lined up decently close to our Nasdaq level where we rejected twice, which is 11,689. When we started to get our rejections on the 5-minute and the shorter time frames, bearish engulfing, bearish engulfing, bearish engulfing, and then a breakdown of the rising wedge, right? 1, 2, 3. It's decently simple to find that entry off that pre-market high lined up with NASDAQ while you also have a pattern. You have a pattern, price action, and the levels all lining up the top of the range. So when I saw that, we got that breakdown, and then we also broke and closed back under a pre-market low. I generally would take my entry here, right? But I waited because I wanted to see if we could potentially retest this 284.28 level, which is pre-market high, or I wanted to see if we could break this higher low or this higher low level, which was at 283.67. So we closed this candle and dumped, and then we got a quick retest close to that higher low level here at 283.68. Right when I saw us push back up to that level, I decided I'd like to take a trade here with a stop on a close above 284.28 with profit targets being close to 281.45, which was my support for the day. We can see why it was my support. Massive bullish engulfing off of that low. Okay. So after seeing that retest, I went ahead and took my entry on this green candle here, right when we retested that zone at 8:45. So after the Apple trade, we saw the market getting weak, and I saw the price action on the Qs start to line up here. So I went ahead and took my entry at 8:45.28 on some 281 or 280 puts at 194. Here, shortly after my entry, we can see the market, gave a bearish engulfing 5-minute candle here that's highlighted right after my entry and gave another perfect signal. So someone waiting for this trade could have got basically the same entry as me if they waited for that signal. I could have waited for that signal, but for me, seeing these 3 bearish engulfings and the rising wedge breakdown, gave me confidence to take this close enough to my stop loss. So my stop loss would have been closed above this level here, and my profit target was down here, right? An entry here. So I went ahead and took that entry, and then shortly after, we got that quick dump down close to my profit target. I wanted to see if we could potentially run back to the bottom of the range here. Sorry, wrong day. I wanted to see if we could potentially move back to the bottom of the range over here on NASDAQ. So when we got that move down towards our profit target, I didn't trim. I just went ahead and put a stop loss on my whole entire position at about, I believe it was 20 to 30%. So right after I put that stop, the market got bought up with decent volume, and I got stopped out of my position from 194 to 250 at 9:06:56. So right, like 2 minutes after that last green 5-minute candle closed. So something to learn here is that stop loss saved me in both of these trades. So in this one, of course, yeah, the market moved lower, but it basically moved all the way back up to my entry, which would have, maybe made me feel uneasy. I'm not saying I would have exited because my stop was clearly up here, but this allowed me to get out of the trade at a good time with profits I was okay with, get stopped out, and be able to go on with my day, have the mental clarity I need to look at any charts or help anyone, in trade floor or voice chat, and also help me, going through my day. I can hop off here and be fine. I traded long, I traded short, and stops, allowed me to get out of the trade before more pain on both times. So enter here, exit here, stop over here, take profits down here. Followed the plan decently from top of the range close to the bottom of the range. And I want you guys to know that there's nothing wrong with putting stops, even if it moves lower after. It does not matter if you took profits slightly early, okay? If you guys watched most of my videos, you'll realize a lot of the times I'm taking profits early, and I'm not saying it like, oh, you should be taking 2% way, even though your profit target is 10%, where your profit would be. That's not what I'm saying. I'm saying if you have profit that is decent, go ahead and either put a stop at entry or put a stop at a percent that you're okay with, securing there. There's no reason to just stay in the trade and be like, oh, well, they gave me 30%. Now I want 40. Now I want 50. Now I want 60. You can say those things, but you need to take an action to prevent it from going to 20 or to 10 or to break even or to negative 10, right? So a stop loss will help you do that every single time, because this could have always came back and retested my pre-market high, which it did later in the day, right? It hit my profit target, where of course I would have exited. But if someone doesn't have a trade plan like this and doesn't always put stops in, this would have been a real tricky one. You could have got caught up here and potentially tricked out of this trade. So I hope you guys were able to see how I lined the Qs and Apple up with this NASDAQ level here, and how I played this pattern, and how I'm usually playing price action with the flag break, candle closing above all bodies and wicks, and then here the 3 bearish engulfings at the top, and closing back under pre-market highs, and then me taking an entry on the retest, which is generally where I take an entry on most of my trades. So I hope you guys were able to learn something from that. I'm going to hop off for tonight, just 'cause I have a few things to do, but tomorrow I'll try and go over those trades that I took on this day today, just because they may be a little they may be more valuable actually now that I'm looking at this Nasdaq chart here, just because today was a um, I wouldn't say a range day, more of a trend day compared to this range that we traded in. So I guess this will give two different outlooks. So I'll go over that tomorrow for you guys. I hope everyone has a good night, and I hope you guys learn something from this.